Hello, everybody, coming to you from sunny Florida, Orlando. As I mentioned last week, this is my sister Darian. Say hello.
Hello.
She has been in the mortgage world for 45 years, so she's got a lot of experience. So what in the world is Fannie Mae and Freddie Mac? Stay tuned. We're going to talk about that in just a second. Just a quick market update since Bex isn't here. Today's rates were 6.74. FHA about 6.1, so you're probably seeing advertised rate for lower than 6, which is a good thing. Again, that's with a buy down. Snow report. I am not in Utah, I am in Florida, but I did look at the snow. We have 473 inches, 3 inches in the last 7 days. But you probably saw the forecast in the mountains is we're going to get a lot of snow. So we'll be over the 500-inch mark here very, very shortly. So if you want to get some spring skiing in, now's the time. All right, Darian, since you've been in the mortgage, and this is my sister. I don't know if I mentioned that. My fleshly sister. So she's, again, been in the mortgage world for 45 years, has a lot of experience. So Fannie Mae and Freddie Mac, are those real people?
No, Cliff. Basically, what those are acronyms for two agencies that were set up to facilitate help with the mortgage securitizing. And what that means is that first of all, Fannie Mae, which is the Federal National Mortgage Association, was set up a long time ago during the New Deal to help purchase mortgages from banks and things like that. And then Freddie Mac was set up afterwards as a competition because the government wanted competition between the two to help market mortgages better. And
so there wasn't a monopoly on one, so they opened another one. Gotcha.
Exactly.
Okay.
So basically, though, they've really played an important part since the 80s. For what they do is they purchase mortgages from lenders who therefore, in turn, after their purchase, they get bundled up and sold to investors on Wall Street as securities. And then what happens is that helps to ensure liquidity in the mortgage market. So basically what it does, it's the movement of money and it frees up money so that lenders can make more loans for people.
So just to emphasize that, why is that important for somebody who's going to buy a house for the first time or somebody's going to be investment? Why is that important to keep the money flowing like that?
Well, for the borrowers, it's important because this helps mortgage lenders and banks and things like that to have money to lend. Because basically what it used to be is back in the day, savings and loans used to, or banks would hold their paper and they would then turn around, the mortgage would get paid off or whatever, and they would have to hold that mortgage and they'd have to use their own money to be able to lend money. So this is why it frees up money, because it takes the money away from the lender. They've already sold it. And then for the investors, it's a tool for them to make money, because they sell it as a security.
So it actually makes more loans available.
Exactly. Right. It makes more money. Yeah, it's the movement of money. Right. It gets the money flowing, so more mortgages can be made, and then it gets the money flowing on Wall Street. And, it's the basic movement of money.
So just keep that. You're going to hear that term. Don't let it confuse you. Fannie Mae, Freddie Mac, they're not real people. It's an acronym, again, for agencies. And just as a first-time home buyer, just remember that your mortgage, your loan is more than, it's going to be sold. Somebody else is going to buy that loan. It doesn't change your rate, doesn't change your payment. It just changes who you pay that loan to. But that, again, frees up more loans for new home buyers or ones that want to buy a second home, right?
Correct. Now, one little caveat I will say about when you're saying about the selling of the loans, Fannie Mae and Freddie Mac will buy the loans from the lender, but I don't know if you want me to bring this out, but what happens is that loans get serviced as well. So what that means is that you might get your loan sold to Fannie Mae or Freddie Mac, depending on the type of loan you get, but the servicing where you're going to make your payment and everything might be actually a different lender. There's servicing rights that lenders purchase. It's another movement of money and to make money. So like you might have sold your loan to Fannie Mae, Freddie Mac, but you might be actually making a payment to ABC Mortgage, even though you might have closed with PNC Mortgage. So it's just, that's a little
way to keep the money flowing, and for these agencies to make money too.
To make money.
Yeah. And last week we did talk about underwriting. My sister, how long were you underwriting for?
I've been underwriting for the last 15 years.
So a lot of experience. Wish we could stay, but I think we're already over the 5-minute mark. So hopefully that was interesting to you. If you have any questions, don't hesitate to reach out to me. Of course, Bex is usually with me, but I have a great resource right here, my sister. So give us a call. All right. Thanks, Darian.
You're welcome.
Enjoy
Have a
the
good
sun
one.
down in Florida.
Bye.
See ya.